Good? We're good, Brian. You sure? You feel good about it? We're going to check. We're going to make sure live is working properly before we jump in. But thanks for tuning in to our live today. We don't normally do the podcast live on YouTube. Normally we wait till we get a chance to record the whole thing and edit it and make it all fancy. But today we're just going to go live on YouTube and just rip because I think this content is timely. So we don't want to delay. All right, we good? All right, let's jump in. Welcome to the Whissel Way podcast. My name is Kyle Whissel with eXp Realty in San Diego. Today, I kicked Brian out of the studio and I brought in my personal insurance expert, Heather Brandt Gastelum. How are you?
I'm good, Kyle. How are you?
I'm good. So Heather and I have worked together now for I think we were trying to do the math, 15 years.
A long time.
It's been a long time. So Heather, I think, insures my entire world. Insures my business, insures my cars, insures my house, insures our drone that we fly around.
True.
This girl literally insures everything that we do. So I'm excited to dive in today and just ask a lot of the questions that I think a lot of us have, right? It's been a crazy time here to kick off 2025. And so we're going to jump in and ask all things insurance related around the wildfires and everything that's happened here in Southern California. Before we do, just want to welcome you to the show. If you guys ever have questions you want to have us answer on the show, you can always go to thewhisselway.com. You can ask us questions on there, subscribe to the podcast and YouTube channel, and join our referral network, and get dialed in with our Media Mayor Mastermind course. We teach you everything you need to know about creating content, audio, video, social, the whole gamut. So all of that is at thewhisselway.com. But I want to jump in. I don't want to waste any more time. Any other announcements? I just want to get into the meat today. So we are recording this today. It is January the 14th. And January the 15th, something like a 16th. What day is it? I don't know what day it is. There's just been a lot. We've had focus on other things and what day of the week or what day of the month it is. But obviously it's, our, just to start this thing out, our hearts, our thoughts, our prayers go out to everybody in LA that's been affected by the wildfires, whether you lost a house. I feel like everybody in Southern California knows somebody who was affected by these fires. So just our thoughts and prayers and everything go out to everybody that was affected. There's a lot of opportunities for you to give back. If you are interested in giving back, we have a website set up. It's donate.fastforwardmovement.com, donate.fastforwardmovement.com. It's one of the organizations that I'm a part of. So if you are looking to make a donation, you want to give back and just do your part to help out. I know a lot of people are just trying to find a way to help. And all of the money that comes in from that will go to help those that were affected by the fire. So donate.fastforwardmovement.com if you're looking for a way to make a contribution. With that said, let's jump in, Heather. So my goal today is really just to help everybody who's tuning in to get a better understanding of kind of what happened up there, what happens next for all of those people, and then what can we learn from what happened up there. So first thing I want to jump into, there's a lot of stories out there on social primarily because social media is, even Facebook's unregulated now. There's no more fact checking. So people can post whatever the hell they want, but a lot of what's being posted is not necessarily true or accurate. So one of the myths that's out there is, the insurance companies dropped all of these people and now they have no insurance. So help us understand, one, why would an insurance company drop's probably not the right word. The right word is non-renew, but why would an insurance company not renew somebody's coverage? And when they make the decision to not renew, what does that process look like? Can they just drop somebody tomorrow, or is there more of a process that goes into it?
Thanks. That is a great question. And yeah, a lot of these questions have been presented, and seeing everything that's been happening on the news and the media, all these rumors keep flying around. Well, from what we know, over the past 24 months, insurance companies have been slowly pulling out of California. As we've seen climate change be a huge factor in our state, a lot of companies just are not willing to take on the risk of certain homes in certain areas that are considered high wildfire zones. and have been sending out non-renewals to our customers over the past 24 months. So this is not something that happened overnight right before the fires, insurance companies just dropping people. This has been kind of an ongoing thing that we've been seeing.
Yeah.
And I have been noticing a lot of the customers getting non-renewals. It usually takes 60 days prior to the date that their policy actually will be non-renewed, that the customers have the opportunity to call their agent, call a broker, and get their coverage replaced. So it's very unfortunate that all this has happened and extremely devastating that so many people have lost their homes, but it's not something that insurance companies just did right before the fires.
Yeah, and it's most of them, from my understanding, they're not just dropping out of one particular area. I mean, some of these guys are just said, we're not doing California, period. And whether you're high fire risk or low fire risk, I mean, you know, State Farm, Allstate, some of these companies have just said, we're just not insuring California at all.
Yeah, it's been a ripple effect. I mean, the first company that about 24 months ago that sent, you know, our agency as a California appointed direct agent of Nationwide, they pulled out, which is a huge insurer in the state of California. They non-renewed all of our book of business. Then shortly after, we started getting notices from all of our other carriers shutting down the marketplace to write home insurance. And then the big player, which was questionable because all the other carriers started pulling out, were State Farm in 2023 stuck on the market. And they were taking on all sorts of high fire risks. And, you know, to the insurance agents and companies, it was really questionable. Why is it that State Farm is willing to take on all these Rancho Santa Fe homes and large properties in 2023? And then all of a sudden the market shifted in 2024 where they just pulled the plug. And that put the market and the industry in a huge predicament where a lot of people were losing their home insurance, and then non-admitted markets started coming onto the market to take on customers' business. We'll get to what the difference of a admitted and non-admitted is in a little bit. But it just threw everything into a huge ripple effect for our industry.
And so when an insurance company makes a decision, right, let's just say it was State Farm, you said it's a 60-day notice before the insurance is not renewed, right? So like, if you guys are watching this, like, I know this is, you know, some people don't want to hear this, but the reality is that people who had no coverage at the time of these fires, they knew their policy was not going to be renewed, right? The insurance company has to give notice, 60-day notice before the insurance coverage cancels, lapses, whatever the case may be. So people had time. Now, don't get it twisted. I have a friend of mine recently who just sent a message out in a group thread. Hey, my insurance was $2,000 a year and I got a non-renewal notice and the lowest quote I can find is $25,000. That's 12.5x the cost. So what has happened with some people is they got the non-renewal notice. Maybe they're similar to my friend who was paying $2,000, and some people just couldn't stomach the $25,000 cost. And so they chose to not renew, not get a new policy. But everybody had notice. I just want to make that clear. Like, people are making it out that the insurance company dropped people yesterday and then the fire happened and now nobody has coverage. Like, people had an opportunity to get new coverage, but again, now, you know, any market cost is always a function of supply and demand. Well, the supply of insurers decreased significantly with many of these big companies getting out of the market, but the demand doesn't change. The same amount of people need coverage. So if you have a shortage of supply, there's only one thing that can happen is price has to go up.
Exactly.
And so, you know, that's the thing that's been hard is that cost, you know, in my friend's case, 12.5x what it was before. That's tough for people.
It was hard to stomach, and it's hard, obviously, to deliver the news. A lot of people had the opportunity to purchase the high pricing, or they chose to go uninsured and self-insure. But the rumor behind, you know, especially these large homes in Pacific Palisades, the average replacement cost of those homes is anywhere upwards of $3 million all the way to $10 million to replace some of these mansions.
Mm-hmm.
And you can't get standard home insurance for that level of replacement cost.
Okay.
So possibly when they say the rumor is they could not get insured, well, yeah, they couldn't get insured easily for the amount of replacement costs that they needed.
Right.
But ultimately, they did have the option to purchase something through these non-admitted markets that was willing to offer coverage at an extremely high price.
Yeah.
Now, for them choosing not to purchase it at that point, that's on them. But if they talked with the right broker, if they got the opportunity to purchase it, they could have purchased it. It's just obviously very uncomfortable in pricing. And to a lot of people, nobody expected these fires to happen.
Right.
But it's a lot more expensive to lose your house than to pay the $150,000 for your home insurance.
Yeah, I think a lot of
Get some
people got
coverage.
comfortable with where costs were, and maybe costs were just never correct in the first place. The companies, maybe they should
Yeah.
have been charging more money.
Yeah.
Like a friend of mine sold a house recently for $11 million.
Yeah.
And the policy that the buyer got was $120,000 a year. 5 years ago, that was unheard of
Mhm.
to have a policy of $120,000. Like, that sounds absurd on the surface of $120,000,
Mhm.
but that's like 1% of the value of the home.
Mhm.
So even if you paid that for 100 years
Mhm.
and you had, the house burned down in 100 years, like, you'd actually come out ahead in that scenario.
Exactly.
So it's like, on the surface, 120,000 is an absurd number. I never imagined anybody paying $100,000+ for insurance, but 1% roughly of the value of the home is not exactly absurd.
Right.
But it's absurd when we're coming, for my friend, 2,000 to 25,000. Like,
Yeah.
that's absurd to have that big of an increase.
Yeah.
But the value of that home is like $5 million. So it's $25,000 a year on a $5 million house. Is that absurd? No, just a 12.5x increase is absurd. And I think that's what got a lot of people paralyzed into not taking action, is they couldn't handle this massive increase.
Exactly. I really agree with you there, Kyle. And then if you look at it on the, frequency that we're having with all these crazy weather conditions in the state of California, they're happening more and more frequently. I mean, San Diego, for Christ's sakes, got flooded
Right.
at the beginning of 2024.
Right.
We don't ever see those kind of floods. We're having massive wildfires in the month of January and December in California. We're having winds like crazy. There's just so much, unstability
Right.
with this weather that we need to just not be so concerned with price on what we're paying for our largest asset, and allow the insurance companies to offer what is out there, and don't be so concerned to pay that price, because you can obviously see these people losing their biggest asset
Yeah.
and then not being adequately covered.
Yeah. And as
Or-
you know, I live in a house that was burned down. I did not live in the house when it burned down. It's been
Mhm.
rebuilt since, but it happens everywhere, and if you're in California, like, you kind of have to be prepared for this at this point, right? It's been
Yeah.
happening more and more. The climate change is real, right? Every year after year, seems to be the warmest year on record. Like, that just,
Mhm.
it seems like we hear that every year. Like, yeah, that's probably just the way it's going to be for the foreseeable future. So
Yeah.
you just kind of have to be prepared for this. So it's like, we always want somebody to be the bad guy. We always want to blame somebody, and everybody feels like they want to blame the insurance companies
Yeah.
here. But I've seen some different studies that a lot of these insurance companies, like, it was costing them $1.09 for every dollar they bring in. Like, okay, so they're losing 9 cents on every dollar. Like, you can't do that. They have no choice.
They're a business.
Yeah.
I mean, ultimately, these insurance companies, they're a business. So they need to make their most ethical decision for their business.
Yeah.
And they have been doing and pulling out from California for the past 24 months. Even before, they're, I remember in the early 2020s when COVID happened, everything starts to shut down with businesses because they don't want to take on the risk.
Yeah.
They're there to take on the risk that they've already taken on. But if they forecast and they see that weather-related conditions keep on happening and it's just too much in certain areas, they're going to pull out. But they're not there to do it overnight. Everybody has their own conspiracies.
Yeah. And as you guys are listening to this, if you guys are watching this, like my number one piece of advice, I don't care what it costs, have a policy, have something. Even if you don't insure the entire value, like get yourself some coverage. The worst thing you could do is just go uninsured. That is not a position that you ever want to be in. Yes, it might be more expensive. Understanding in the insurance company, it is a business. One, they're losing money, which is why they've had to do this. They at least need to break even, right? They're running a business. Hopefully they make a little profit if they're going to deal with all the headaches and stuff. So just make sure at a bare minimum, get some coverage. Just get something. What I like, Heather, working together with you is, I've had multiple policies non-renewed in the last couple of years. But the beauty is you always call me and like, hey, just as a heads up, Safeco's pulling out. We need to get you new coverage. And then we explore what the options are. Oftentimes that option today for many people, self-included, is landing on the FAIR plan. So I've heard people that say this is like a state provided insurance, but I've heard other things. So what exactly is the FAIR plan?
So it is a government regulated pool that all the admitted carriers are required to pour into. So all admitted markets through the state of California have a certain stipend that they're required to put money into on every year. And as losses keep happening, they're required to pour in a higher percentage. So the California FAIR Plan, it's like a fund in a way, an insurance policy for our state of California that has only a certain amount of reserves set aside to take on high risky homes in certain areas that are likely to burn down. The issue with it is you're capped on only $3 million total insured value that you can purchase within the policy. And that includes all lines of the different coverages, including the dwelling coverage, the personal property, the loss of use, other structures, and replacement costs, ordinance and law. All those have to equate to a max of $3 million. You cannot purchase more than that. And then the deductibles max out at $20,000. So you can't purchase a huge deductible on it. You can only get with max of $20,000. So it's kind of like a security blanket for our insureds to still maintain their loans, because loans are required to have fire insurance, and still maintain some form of insurance for their homes. But you're capped at $3 million.
So to clarify, it's not a government program. It's just regulated by the government. But the money is from all the other insurance carriers. They're actually the ones that are funding this whole thing. So you've mentioned admitted and non-admitted a couple times. What's the clarification between those two?
So admitted means that they are regulated by the state of California, and they're required to report and abide by all of our state commissioners' guidelines, regulations with timelines of paying out claims, and caps on certain amounts that they can take for rates. So they're regulated by the state commissioner. Non-admitted carriers are outside of the state of California, privately owned and funded insurance companies that are licensed and insured outside of the state of California. They have their own backing, they have their own reinsurance, they have their own pool of money that they can create and decide to come into the state of California and charge whatever amount of premiums that they want to charge, and include surplus line taxes and fees for insureds, but they still can insure in certain high risky areas. They're just not governed by the state of California.
Got it. And so that's where you mentioned that the FAIR plan, the limit is $3 million now. And I will touch on making sure people have adequate coverage, because one of the first things when we first met was you reviewed my existing policies, and we realized the coverage amounts I had were not adequate enough to rebuild the homes that I owned at that point if they were to burn down. Because construction costs post-COVID, like the construction costs shot through the roof during COVID and have never come back down. They've continued to stay high to where most of California, you're at a minimum of like $300 a square foot to rebuild right now. A home in the Palisades, you're $500+ a square foot to rebuild, like minimum to rebuild those homes. So oftentimes, $3 million is not enough. Palisades is going to be a great example where a lot of those homes, you could not rebuild those homes for $3 million.
No.
So what happens, right? If somebody takes the FAIR plan, okay, that gets you 3 million, then what? What if your home was $5 million to rebuild? So now you're $2 million short. And again, that 3 million includes, like you mentioned, loss of use and additional coverages. But let's just assume your home is 5 million to rebuild, you got 3 million from FAIR plan, there's still a $2 million shortage. So what do you do in that scenario?
That's the loss that you're willing to take. There's really not much that people do if they didn't purchase a policy outside of the California FAIR plan that gives them the adequate protection that they need.
Okay. So that's where they could choose to add an additional policy to lay on top of the 3 million.
Correct.
So I've heard those are expensive.
Very.
So let's say something like that today in Los Angeles or in San Diego. Let's say I need $2 million of additional coverage. What does that cost? Like, what's a super rough? Let's assume it's a high fire risk area. What is $2 million more coverage? Maybe if you want to give a range, just nobody hold her. She's not going to tell you an exact number. You can't call her and be like, you said it was this. Like, just trying to get a range here, guys. Take it easy. It's like a rough idea.
I would say it's going to be closer on the upwards of 50 grand plus a year for something like that. If you want to purchase $2 million of a blanket coverage for dwelling. And that's really in those areas that are extremely high fire zones, extremely massive property that no non-admitted carrier wants to initially insure before the California FAIR plan.
Okay.
So if I've exhausted all markets on the non-admitted space and there's no company that's non-admitted that would even touch that home.
Yeah.
Then I'm doing the 3 million of FAIR plan, plus I'm approaching a blanket coverage. And those are really pricey.
Okay.
The non-admitted, if you are able to get a non-admitted market to ensure the full value for replacement costs of your home, I mean, we do know prices are going to go up on those probably in the next 12 to 24 months as they renew. But for example, I have a home in Rancho Santa Fe that is about 7 million of replacement costs, and the client's paying about $110,000 a year for a policy that covers $7 million.
And that's a non-admitted?
And that's a non-admitted.
So the order would be get an admitted policy if you can. That's typically going to be the lowest cost. Secondarily, go to a non-admitted policy if you can. And if you can't, then you're going to go to a FAIR plan. That's kind of option 3.
With a layer.
And then you're going to have the decision to make. Do you want to just take the 3 million, or do you want to throw a blanket policy on top of that to cover above the 3 million, assuming obviously that's your rebuild cost?
And then the caveat with that is a lot of these homes, they have loans.
Yeah.
So the lender is going to require full replacement cost. You can't cut it short and say, oh, I just want to choose a $3 million policy. I'm good paying $6,000 a year.
Right.
Your lender's going to be like, nope, we need to see replacement cost estimate, and we need to see that you have the full value replacement for your large home.
Yeah.
So you're required to buy that additional layer.
Are they going to require you have a coverage at least up to the loan amount, or are they going to require full coverage for the cost to rebuild?
Well, typically the loan amount for the most part is usually a higher number for a lot of people than what is replacement cost in California, but it's always replacement costs that they need to see.
Okay.
There's a lot of time that replacement cost is a lot less than the loan you purchase.
Right.
So when I get requests that come in saying, oh, we need such and such number that's way higher than what is replacement cost, all we do is we send in a replacement cost estimate showing what the accurate replacement cost is and the evidence of insurance showing that it matches. And then they're good. Okay.
So let's jump into, for somebody who was affected by the fires, lost their home, what happens next for them, right? They have no house. They have a mortgage on their house. Like, what is this? Obviously, there's all kinds of stuff, right? They've got to, find a place to live and all that. But as far as from the insurance perspective, what does that look like for someone who lost their home?
So obviously, if you lost your home, the first thing you're going to do is contact your broker. If you haven't already, contact your insurance company, open a claim with them. I have been hearing that the California FAIR plan, if you did make the claim about a week ago, is starting to get in touch with customers, having adjusters assigned. But this process is not going to take anywhere near to your, getting the entire coverage and check cut to you right
Yeah.
away. It's going to be a process of them reviewing and going through. And typically for a house burn situation, minimal a year
Really?
for these customers to get full replacement of the checks.
Wow.
And usually if they choose to replace their home, then you're going through the process of like dealing with the contractors and cutting checks to the contractors. The main thing that they need to get right now is replacement funds for loss of use.
Okay.
So hopefully California Fair Plan steps up and can pay additional living expense checks to the customers that lost their homes right away.
Yeah.
And I have been hearing adjusters are responding. I haven't heard any checks have been cut today,
Yeah.
but hopefully in the next week or two, customers should start seeing some sort of assistance with that. And then what they do going forward is take that money, you either rent or you consider looking into purchasing a smaller home, a replacement home, and relocating until either the government can figure it out or California Fair Plan or the insurance companies pay out.
Okay.
It's an extremely unfortunate situation.
Yeah, it's terrible. Do they need to make their mortgage payment while they go through this process for the house that doesn't exist anymore?
That is not in my department.
Okay.
That would be my husband's question
Yeah.
or answer. I don't know that question, but
Okay.
I probably should, being I'm married to a lender.
There you go.
I would hope not.
Yeah.
You know what I mean?
Yeah.
I would certainly hope the banks give them some form of relief.
Yeah.
But it's all going to be up to what guidelines
Yeah.
the governor and, puts out to the banks of
Yeah.
what
And
they need
it's
to
been
do.
crazy. Like we have a ton of friends in LA that are real estate agents, and the amount of phone calls and text and emails and everything they're getting from people trying to find housing right now is wild. I had somebody message me like, hey, I have, now, if you guys aren't familiar, average home price in Palisades is, multi 7 figures. Like they're like, hey, I have 5 million. I need a house. I can close in a week, all cash. What do you have?
Yeah.
And I sent that to one of my friends in LA that's a realtor. He's like, I'm getting like 20 to 30 of that exact message every day right now. Like it's crazy. And so you have those people that want to buy, and then you have people who don't have, that are not that fortunate to have that kind of money, that just need a place to rent.
Yeah.
Well, the reality is we don't know what the final number is of like how many houses were destroyed. I know there's, over 10,000 structures, but a good percentage of those were houses. There's thousands of people that need a place, so there's those that are trying to buy, which there's not enough of $5 million homes for not 10,000 $5 million homes for sale. Additionally, there's people that just need anything, right? Even if it's a studio, just to go rent something, just a place to put their family, so whether it's a studio or a small house or whatever, there's just not enough for everybody to go around. So it's very, very unfortunate for people that are up in LA. And what we're seeing is there's people that are just deciding like, maybe LA is just not for me.
Mm-hmm.
LA already had the highest outbound migration of any city in the country. So we're already starting to see people coming down to, Orange County, coming down to San Diego. So if you're watching this, right, if you were affected, somebody who that lost their home. If somebody wants to come down here to San Diego, if they choose to buy something here in San Diego, our team, 100% of my team is committed to helping people in that scenario. If somebody buys down here, literally every dollar that's paid to us, we will either give back to you, assuming you're the one who's affected. So we will literally work for free. Alternatively, if you don't want the money, maybe you're blessed enough that you don't need it, we'll donate it to whatever charity you want. So if the next step for you is coming to San Diego and you want to buy, if you lost your home in the fire, we will give you every dollar back that's paid to us. We have zero desire. This is not a time to make profits. In times like this is the time to just serve. So we are happy to serve. And it was cool for me to put it out to my team and say, hey, who would be willing to do this? Who would be willing to give every single dollar back and work for free? And literally every agent on my team, me, I'm in. So it's cool to see that. So literally, I don't care if you're buying a $10 million house, 100%. It's yours. We don't want to make a dollar. We just want to serve. We just want to help. So if that is something you're interested in, send me a DM at Kyle Whissel. I'll connect you with the right agent to help you. But we don't want to make any money. Like, that's yours. You've been through enough at this point. So whatever we can do to help, we want to do. So just reach out to me if that's you or you know somebody. And I have colleagues in other cities and states that are taking on the same pledge, so to speak. So maybe it's not San Diego, maybe it's Riverside, maybe it's Phoenix. I have friends in all these different markets that are willing to do the same thing. So just reach out and I'll connect you, whether it's here in San Diego or somewhere else. Happy to connect you. This is the time for us to serve. So
Kyle.
we touched a little bit on adequate coverage. So what should somebody do? Like, they're watching this, or they're listening to this right now. They need to go grab their policy statement, right? What are they looking at on there to see if they have adequate coverage?
So the big thing we need to pay attention to is the replacement cost in today's market for rebuild.
Yeah.
And the way that we calculate it as agents, we look at the home's existing features, and then we take average replacement costs based on whatever style of home that you have. And on average right now in California for a custom home, say it's like 10 years old, custom style is anywhere $400 to $500 a square foot.
Yeah.
Anything that's more on the basic side, a little bit older, maybe built in the 1980s to the early 2000s, that one's probably with no updates. Let me make sure I get that clear. There's not been any updates, just older. $300 to $400 a square foot.
Okay.
And then anything that is really high end, really custom, has a lot of like beautiful premier features, you're looking upwards of $500 plus per square foot for replacement cost. So depending on your square footage of your house, you need to take that rough calculation and multiply it by the amount of square feet that you have. Then from there, we take the replacement cost, we enter in the features into the replacement cost estimate, and that could be something either call us or call your insurance agent and have us calculate a replacement cost estimate for you. It'll give you a number. Usually the carriers, they can kind of like roughly pull that number, but a lot of time it can be underinsured. So it's better to go overinsured on that number than underinsured.
Yeah.
I usually say anywhere like 500,000 plus on top of that number, you should probably overinsure yourself, because with inflation costs and all the changes that we've been having in our state, the cost of labor and materials has gone up, and it continues to keep on going up. So with that being said, you also have extended replacement costs a lot of times built into your policy.
Okay.
So anytime you have that bottom line dwelling number, you need to understand if you have the extended coverage, it's either a percentage of 25% or 50%.
Okay.
That if there's a total loss, the house burns to the ground, like what happened, the policy would pay out the dwelling coverage plus an additional limit of either 25 or 50% on top of that dwelling coverage.
Are you finding that obviously on admitted policies, that's probably the most common? Do non-admitted or the blanket policies ever have that?
No.
It's pretty rare.
Yeah, no, ever. They're usually just a straight dwelling coverage or property limit.
Okay. So that would be something too, as somebody's going in and analyzing, do they even have enough coverage to start with? Also check to see if they have extended dwelling coverage.
Correct.
So one thing my brain goes to when I start thinking about this is like, let's say I look at mine and it's under. If I call my insurance person and say, hey, I actually want to increase my coverage, is there a risk that I could get dropped? Like, I would actually have a fear of that. Like, oh, maybe I don't know if I want to rock the boat. Like, I don't want to lose my policy. I hear all these policies getting non-renewed. Is that possible if they want to change their coverage amount, that a carrier could choose to non-renew? Is that a risk at all?
It is a risk, which is why you do need to talk with a professional that understands what kind of policy you're on.
Yeah.
If you're already at the top level on your policy of the maximum binding authority that carrier can go up to, then calling your broker and having these discussions, hopefully he or she advises you one way or another that you're already at your max, that we can't go above that before we take the request to underwriting.
Okay.
So in our case, we have a team, like I have a team of service people. When it comes to discussing coverage, though, I wouldn't have you call my team and ask that question.
Yeah.
I would talk to your broker specifically.
Yeah.
Because your broker knows the ins and outs of policies, guidelines of each carrier, et cetera. So just make sure you're talking to the person.
Yeah. Okay.
Yeah.
That's really good advice. But ultimately you do want to make sure you have adequate coverage, right? I mean, that would be, God forbid, it's bad enough to lose your house, but then to lose your house and realize that you didn't have enough coverage. Maybe you're like, yeah, I have coverage, I have insurance, but then you realize you're insured for like 500,000 of replacement costs, and it's going to cost $2 million to rebuild your home.
Mhm.
That's a not as crappy of a feeling as having no coverage, but that's a
Right.
pretty crappy feeling too, to think that you had coverage and you didn't.
Not having full
Not having
replacement.
enough.
And
I had a property in Buffalo actually at one point, and it it was arson that burned it on that particular case. It was in the hood. But I was in a scenario where I didn't have enough. Luckily, it was enough to pay the mortgage off, so I was able to, wipe that out. But I was fortunate that my balance owed versus how much money I got was enough. But
yeah.
That was a very small sub $100,000 property, so it was a little bit more manageable. But if you have a $2 million property and you don't have adequate coverage, we could be talking about 7 figures.
Yeah.
That you could be upside down.
Absolutely. That's why it's extremely important to do policy reviews with your customers, and don't be afraid to call your agent. Don't be afraid to ping them, email them, bug them, make sure that they, text them, call them. I'm actually going to send a blast email out to all my customers after doing this, trying to send calendar invites, get people on my calendar.
Yeah.
So
if you don't talk to your insurance person at least once a year, like if they don't, just give you a little update on where things are at, like I would be concerned. That's something that even us as realtors that we do, right? With all of our clients, we offer a equity update every year just to make sure our clients know what's their home worth, what could they refinance it for, what could they rent it for, what could they invest in. I know Heather connects with me more than once a year to make sure I'm updated on my policies. Like if your insurance person's not at least connecting with you on an annual basis, I'd have some concerns about that because, right, especially over the last 4 years in particular, between COVID and fires, tons has changed in the insurance world. So if you haven't heard from your insurance person in 4 years, like that would be concerning for me.
Yeah, absolutely. But there's been a lot of shuffling over the past few years, just with everybody dropping out. The large players like Nationwide, there's been farmers that pulled out, that froze from writing business for a while.
Yeah.
They've come back, but they're writing, I think, a max of 7,000 policies statewide across all agents each month.
Wow.
So that's, on a scale, not very much. And they're very picky too about what they take on.
Yeah.
Same with Travelers. They're writing for all still appointed agents, only one home policy you're allowed to bind per month.
Oh my gosh. Yeah. I know my house, the people I bought it from had a policy with Farmers, but then they wouldn't offer that policy to me when I took over ownership. I was like, you're already insuring the house. Why are you going to cut me off? Like, why would an insurance company do that?
Well, the market's constantly changing. The risk is constantly changing about what they want to take on going forward, considering it as a new business versus something that maybe they wrote years ago that somebody was on that policy that they have to maintain the coverage because the contract was signed so many years ago. But when conditions of the market are constantly going up and down, weather-related conditions keep on happening, insurance companies are constantly reevaluating risk on a daily basis now. So there could be a carrier that wrote yesterday that all of a sudden we try to write you today and they've shut down the market.
Yeah. Can they non-renew you in the middle of your policy? Because your policy is normally a year. Can they non-renew 6 months into the policy, or do they have to wait till the 12-month mark?
The only way that they can non-renew it is if they had an inspection and they see something on the property that they specifically don't like. They send a notice out to the customer and the customer doesn't respond in a timely manner to the letter. But they can't flat non-renew the policy because of a wildfire zone in the middle of the policy term. It would only happen at renewal.
Got it. All right. Let's talk about what are some things people could do to lower their insurance cost? What are some things that they could do either to the home or the type of policy they bind, the deductible on the policy? What are some of the things somebody could do to keep the cost down?
Yeah, a lot of time, with all the rate changes that have happened with the FAIR plan, primarily we would always sell policies recommended $2,500 or $5,000 deductible. That was past times. And now anytime a customer calls me and says, my price just keeps going up, what can I do? The first thing I look at is, well, let's see what deductible you have. So taking the highest deductible for your fire insurance is a really smart move because it causes you not to make small little claims. Plus it allows you to save at least $1,000 to $1,500 typically or more on your home insurance policy. Year over year.
Yeah.
So you're making a claim on something extremely large, like a serious fire. And if a fire does happen, the loss is going to be substantially more than $20,000.
Yeah.
So that would be my first suggestion,
Okay.
taking the highest deductible. And then, for the admitted carriers that offer different discounts, Fair Plan, unfortunately, they don't offer discounts. They're just what they are.
Yeah.
You change your coverage limit, you change your deductible, that's what you can do. On admitted carriers or even some non-admitted carriers, they may have opportunity for different deductibles. There are a lot of companies that if you have your auto insurance with the same agent, doesn't matter if it's a different company, but if it's with that same agency, they will offer you an auto home discount. So that's an opportunity. Adding fire sprinklers, if you don't already have them. Fire sprinklers is a really good idea. I know it can be pricey, but ultimately it can be a really good thing if a home catches fire. Central burglar alarm, central fire alarm. Central meaning it reports to a third party monitoring system, not your Ring camera on your phone that you can see an app and it alerts you. Yeah. That's considered local and that doesn't give you a discount. Central.
Also, there's like a flood sensor thing I've heard of people adding.
Yeah, water backup sensors. Okay. Those are good to have. So you install those on your water heater. It's a little tool that you can buy on Amazon, you can buy online, and you just call your plumber and have them install it.
Yeah.
And it also centrally alerts you on your phone if there's a water leak going on in your house. So that's a really good one too.
Okay.
So those are all good things.
Okay, cool. Last one I want to hit on, we have a lot of real estate agents who watch the show. What is some advice for them working with buyers, also working with sellers? What are some things they can do to help their clients that they're actively working with? Obviously, if you have a client you've helped in the past, maybe you just send them this video. But if let's say I'm working with a buyer and they're looking to buy a home, what should they know? What should they be keeping in mind? When should they reach out to you to check on insurance? All that stuff.
So over the past year, I would get a lot of inquiries from real estate agents with prospective customers that are buying in certain areas in San Diego or anywhere that call me and be like, Heather, we've gotten word from all other insurance agents that this home is uninsurable. Mm-hmm. Well, all homes are insurable with California Fair Plan, but you're like we went back to our initial conversation, you're max at $3 million. You could still get an insurance policy for any property in a fire zone with the California Fair Plan. So if you ever hear that, we can help you. You can get fire insurance. So that's one thing that I want real estate agents to know and understand, that if you're selling a house to a customer, tell your customer we can get it insured. It's just going to most likely be a fair plan.
Yeah.
And then separate from the fair plan, you purchase what's called a difference in condition plan.
Okay.
That covers all the other perils that the fair plan won't pick up.
Because fair is really just fire.
Correct.
Yeah.
It's like fire, smoke, vandalism, malicious mischief with the extended coverages, and fire resulting from wind and hail.
Okay.
Does not cover wind and hail, like if it's just wind. It's only fire resulting from wind and hail. So that's why it's also very important to add on the extended coverages to your plan. The difference in condition picks up theft, burglary, vandalism, water damage if sudden and accidental, liability coverage, which is really important for those that have umbrella policies. So you have to purchase to have full protection for your home, both policies together.
Okay.
So for those agents though, call me at least 30 days in advance, and only once your client enters into escrow.
Okay.
If you want a rough estimate, you can call me. I'll give you a rough estimate, but I'm
Yeah.
not there to give you a quote if you just have a prospective buyer that hasn't actually entered into escrow.
Okay. Is it possible just by looking at a map to find out if there's admitted or non-admitted carriers doing a particular area? Or like, can you tell relatively easily if you're going to be able to get an admitted or non-admitted policy versus fair plan, or is that harder to do?
It's a little harder to do. I have been doing this long enough that I can understand more or less, maybe.
Yeah.
But if it's in a certain zip code, I'm familiar with the zip codes.
Yeah.
Like San Diego, Jamul is a no-no.
Yeah.
There's San Marcos for the most part, which is a no-no. Ramona, no-no.
Yeah.
Like
your fair plan.
all those
100%
are
of the
fair
time.
plan.
Yeah.
But, there are certain pockets in San Diego that are questionable that it's possible.
We're like
might be able to
Poway,
do
right?
it.
Like Poway on the outskirts is
Right.
rural, but then, in the middle of the city off Poway Road, it's, more urban. So
Right.
there's going to be zip codes too that vary.
That's why it's important. Just call us and we'll quote it.
Okay.
Like, we'll just send you a list of all the companies that are out there for the risk.
Okay.
And then we'll know whether or not it's fair plan or not.
Okay. And sometimes it takes time to bind these policies too. You can't, like, before we actually updated our process emails that go out to clients because we had insurance as like step 4 or 5 in the process. It was like, get your home inspection, do your appraisal. We've moved insurance to the very front of it.
Mm-hmm.
So that one, we can find out what type of policy can we get and is it affordable to you?
Yeah.
Are you a $120,000 a year policy? Or are you a $12,000 a year policy? So we've moved that up to the front of the process too. I think that was something people backloaded and did later in the game, but some of these policies could take a few weeks to bind. Like Candace, it's not tomorrow you can bind these things. So that would be another thing. Just if you guys are watching this, like when your buyer goes under contract on a property, like you need to call Heather or whomever you work with, like immediately.
Yeah. As soon as you enter escrow,
Yeah.
call, get the quote in hand and get that like laid out so the buyer is well aware of what their pricing is going to be.
Yeah.
So you're not scrambling at the last minute, especially for the larger homes. If you have anywhere upwards of 4,000 square foot homes or higher, make sure you call your agent ahead of time because a lot of times those homes are $2.5 to $4 million sometimes for replacement cost.
Right.
And so your standard markets aren't going to write that high of coverage. So make sure you're calling the agent ahead of time and getting the quotes and applications out so we can gather the quotes and have them ready for your buyer. So this kind of scenario doesn't happen last minute.
And then what about if we're on the other side? So let's say we list a 4,000 square foot home, let's say it's a $6 million house. Can we get quotes up front on something like that? Is that possible or no?
No, because the market conditions are always changing. And if it just sits on the market, like I can give you a rough estimate of what we think it might be, but I can't give you a formal quote because you have to have all the customer information. You have to put the submission out there. And a lot of time insurance underwriters, they don't like to get multiple different submissions on the same property. They can tell that something weird's going on. So it's best just once you enter into escrow, call us and we can get the ball rolling.
Okay. And you brought one thing up, just brings one more last question. I said last one, but you mentioned umbrella policy. For somebody who had no coverage or inadequate coverage, is an umbrella step in on something like this or no?
So an umbrella policy is a liability policy.
Okay.
It's not going to cover physical damage due to a wildfire.
Got it.
The only time an umbrella would kick in is if there's a liability lawsuit for bodily injury property damage that our insured was sued for, that they have to access the underlying liability on their home policy or their auto policy.
Okay. So if somebody was injured on your property, fell downstairs or something, and your policy did not cover the entire claim, that's where umbrella kicks in? Correct. Okay. Got it.
Exactly.
You guys get an umbrella policy, please. Like it's the cheapest insurance per dollar. And I've talked to a lot of very smart and wealthy people over the years, and every single one of them swears by their umbrella policy. It's one of the least expensive policies that you can get for millions of dollars worth of coverage. Like get one. If you don't have an umbrella policy, like do yourself a favor. If you learn nothing from like this whole podcast, like get an umbrella policy. I know that's not where we started this, but we'll end it with that. Is you got to get an umbrella policy, guys. Like that's a no-brainer, especially if you own multiple properties, you own businesses, you're a target for these liability type cases. So definitely want to get in there. Anything we didn't cover that you feel like would be really important before we wrap up? I know we hit a lot.
Yeah, I mean, as you just get these non-renewals, just know a lot of the insurance companies are shifting around. There's just a lot of changes. There's a lot of risk that insurance companies are questioning. And I've had a lot of questions from customers as well as just random people that know I'm in the industry. So what's going to happen with the insurance industry? What's going to happen? Well, do expect your rates to be increased quite a bit over the next 24 to 48 months. We should see a lot of changes. I'm really hoping that after this, there is some sort of change with government regulations to maybe increase the limit on the California Fair Plan for coverage. I'm hoping there's some changes there. That way it allows customers to have more coverage than not if they fall into the Fair Plan. And then just make sure to communicate with your insurance broker. Don't be hesitant to give them a call and increase your coverage. That would be my suggestion. Reevaluate, because the cost of labor and materials over the past 5 years have almost doubled. And insurance policies that you haven't touched that you may have stuck on, or the policy's still there, they only increase it like 5% year over year automatically. That doesn't even equate to what the cost of labor and materials are today. So check on your policy, call your agent, and try to bundle everything. That way it provides you convenience of having one place to go to.
Awesome. And then go ahead and would you prefer somebody email you, call you, or do you want them to bug me and then I'll connect you?
That would be perfect.
Would that be good? Okay.
Yeah, I would say.
If you guys are watching, so you guys don't hammer her with questions, just DM me Instagram at Kyle Whissel. I will connect you with Heather, and she can sit down. Again, when I first switched over to her, we had a whole recalibration of all of my policies because I was underinsured on pretty much everything. So we were able to get everything calibrated, make sure that I had adequate coverage, and then figure out where there was opportunity to save some money as well. She's been great for me, and I know she'll be great for you. But either way, guys, like if you take nothing away, like you need to have coverage at all costs. Do what, some of the things she mentioned, jack up your deductible, whatever you need to do. So you at least have coverage. The worst thing is to go into, this new world we live in with no coverage. So make sure you get yourself some coverage, throw an umbrella policy in there while you're at it. And again, just to kind of wrap today, like just thoughts, prayers, everything goes out to everybody that was affected. I can only imagine, what you guys are going through. So God bless. And just as we wrap, want to thank you guys so much for tuning in this episode. Hopefully you learned a little something today that can help you, that can help a friend, a family member, a colleague, make sure that they are positioned as well as possible, in the event that they need to leverage their insurance policy. Heather, Brant, Gastelum, Kyle Whissel with eXp Realty. Thank you so much for tuning in to this episode of the Whissel Way Podcast.